All right, what's up, everybody? This is Scott here again with a new video. Today is Wednesday, May 11th, and in this one here, I wanted to discuss the new CPI number or the inflation number that came out for this past month of April. And also in this video, I'll be showing you that inflation is actually much worse than what is being reported in these calculations. And that's because these CPI calculation methods have changed many times over the past years, past decades. And of course, every time they do tweak things or manipulate things, it always has the effect of making inflation seem a lot lower than it actually is. And then also towards the end of this video, we'll take a look at the markets, and I'll be discussing my general market outlook for the coming months and coming years. But as always, before we dive in here, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. All right, so first off here, let's take a look at this Yahoo Finance article. And as you can see very plainly with the headline, inflation decelerates slightly from a 40-year high as overall the CPI index rose to 8.3% for this past month of April. So now if we scroll down a bit here, and we'll just focus on the first few sentences or paragraphs here. And so as you can see, U.S. consumer prices rose at a slightly slower pace in April compared to March. That's the main comparison they're making here. Although, of course, we are still seeing persistent supply side disruptions that are keeping inflation near its highest levels in 40 years. And also, core consumer prices rose more than anticipated, even with this overall deceleration compared to last month. And then in particular, if you focus on this next paragraph here, the Bureau of Labor Statistics reported that for April, the CPI rose to 8.3% compared to last April, which is a bit less than from March, where we saw CPI rise by 8.5%. So basically the difference here is just a meager 0.2%. So overall, inflation is still very hot in the US and definitely in many other places in the world. And like I mentioned, the inflation numbers you're seeing today are, in my opinion, very inaccurate compared to what they would be showing if, the Bureau of Labor Statistics was using their methodologies from many years ago. Right? Again, the CPI calculations have been changed many times over the years to pretty much always have the effect of making inflation appear much less severe than what it actually is. So now, for example, if you come over to this tab right here and take a look at these two charts, in this first graph here, it's showing you a couple different ways of calculating these CPI numbers based on either today's methodology or based on the 1980 methodology, the 1980 calculations over the past 20 years or so. So basically just focus on comparing the blue line here, which again is the 1990 version of the CPI, and the red line, which is today's calculation. And as you can see very obviously here, all through this time for the past 20 years, the 1990 version of the CPI has always been greater. And taking a look at today's numbers, right, for April of 2022, the CPI number came in at 8.3% based on today's calculation, as you can see right there. But based on the 1990 calculations, inflation would actually be around 12 or 13%, much greater. Moreover, let's now come down to the second chart. And this chart here is doing the exact same thing, except it's comparing today's CPI number here in red with the 1980s version. So going back even further in time, another 10 years. And also this chart does go back even further, all the way to 1980, it looks like. And two things I want to point out on this chart here. Number one, all through this time here, basically between 1980 and up until around 2020, the CPI number used by today's methodologies is pretty much flat. Right, inflation based on those calculations for the past 40 years or so has pretty much been less than 5%. Seems very normal, and basically exactly what the Federal Reserve and the government wants it to be. But then if we compare that to the 1980s version of the CPI calculations here in blue, during the majority of that same time period, inflation was actually expanding. Right, mostly through all this time right here, as you can see with the blue line, inflation was steadily climbing higher and higher. And it did plateau for a little bit here leading into the early 2000s. But once again, we have a huge mismatch between an earlier version of the CPI calculations and today's calculations. And then number two here, if you fast forward to today, once again, the modern version of the CPI number came in at around 8.3%. But based on the 1980 calculations, it would have been well above 16 or maybe even 17%. And this here is obviously much higher than the 1990s version, which like I showed you came in at around 13%. So once again here, more evidence that over time, right, between the decade of 1990 and 1980, the CPI calculations were changed at least one or more times, which had the most significant effect of making inflation seem much less severe than what it actually is. And also the whole concept of the CPI and those calculations have been around for much longer than just going back to 1980 as well. So my guess is even this number here is not even entirely accurate. For all we know, the true inflation numbers could be above 20%. And so there you go. Inflation is obviously much worse than what it appears to be today, thanks in part to our government and them trying to tweak and manipulate things to fit their overall narrative or their view of reality and things like that. Of course, I'm not some big, government conspiracy kind of person. All I'm saying is that I personally do not take what the government says or what they report verbatim as 100% fact all the time. Right? In many cases, to get the full picture of something or to get the full truth of something, you do have to dig a bit deeper beyond just what the government reports or what they tell you. And obviously with inflation here, this is definitely one such area where there's not 100% honesty. And of course, also, I definitely will agree that perhaps over the years, there may have been a real logical need to change the CPI calculations based on changing circumstances or a new set of facts that have, been discovered, something like that. But still, if today we're seeing such a divergence now between today's CPI number compared to 1990 or 1980, right, where basically the difference in those numbers is more than a factor of 2x, then I think there's something more going on here than just a slight tweak of things based on a change in circumstances. Right, if you ask me, my personal opinion is I definitely do think there is a significant part of these calculations being changed, mostly simply to manipulate the actual CPI number to make things seem much better than they actually really are. And then finally here, let's come over to thinkorswim and we'll take a look at the market right now to see how things are reacting based on that new CPI number. So what I'm showing you here is SPY, basically an ETF that tracks the S&P 500. And we'll go ahead and zoom in here a bit. And of course, as I would expect in this kind of crazy market off of some very bad news like raging inflation, the market is up pretty big today, well over 1%, just like it was back here during this day when the Federal Reserve announced they're going to increase interest rates by 0.5%. And also, of course, with many more rate hikes to come in the near future. And generally speaking, logically speaking, that is bad news for the market, but we saw a huge rally on that news. And then, of course, once reality finally hit the market square in the face the next day, everything unwound and fell a lot lower. So today, I would not be surprised if we saw the same kind of thing maybe. Again, inflation came in red hot and we're seeing a nice rally today. That's apparently good news. But again, once the reality of things come back into the picture, perhaps at that point, we'll see this rally get undone and we'll make some newer lows. And do also take note that we are still definitely in a major downtrend in the market right now, even after seeing some pretty vicious bear market rallies over the past few months here. Right, especially this one here. This one actually scared me quite a bit because it was so vicious to the upside where pretty much every day in a row, the market was going higher by 2 or 3%, which is just absolutely ridiculous, especially because nothing had really changed, right? There was still the ongoing war and still the ongoing war today between Russia and Ukraine. Inflation, as you just saw, is still very red hot. Interest rates are climbing faster and faster. We saw for the last quarter of the economy actually contracted when it was expected to expand. So we still have all these red flags going on in the world right now in the US, but the market for some reason during this time was just skyrocketing to the upside. It was as if nothing mattered. But of course, at some point, reality does have to come back into the picture, and things, thank God, eventually unwound and came back down in a huge way, which is what you would expect to see logically based on the current environment that we're in right now. And moreover, let's actually change the time frame on this chart. We'll go to a max weekly chart, and then we'll zoom in a bit, perhaps right into this area here. So do keep in mind also that right there was the peak before the COVID crash back in March of 2020. And then at the bottom here, this is when the Fed initiated its super easy monetary policies of basically buying up trillions and trillions of dollars worth of bonds and other assets, printing money, keeping rates basically near zero, all this kind of stuff to inject liquidity and support the economy and the market. And in my opinion, I don't think it's a bad thing for the Fed to step in during a crazy time like this to try and support things. But I definitely also think they overdid it quite a bit. Right, so this huge bull run since the bottom of the COVID crash was pretty much just because of what the Fed was doing. Of course, you had a few companies that were actually benefiting from COVID, mostly tech companies because everything was moving to an online or digital space. But for the most part, most companies in the S&Ps were not doing well during COVID. And yet somehow, of course, the market continued to just climb higher pretty much every day, every week by a very large amount. So once again, that's why, in my opinion, most of this bull run was simply due to what the Federal Reserve was doing. And then, of course, the major consequence of all this super easy monetary policy from the Fed is inflation. They are literally the creators of this problem. And so now trying to combat inflation, they have to basically try and undo all of this crazy stimulus that they were doing for the past 2 years or so. And so ultimately, that's why, in my view, the market is now finally coming back down. Because now finally the Fed has no choice but to combat inflation, the problem that they actually caused, by reversing all their super easy money, crazy stimulus policies that they were using all through COVID. So personally, I do think the market could see a lot more downside even from these current lows. Definitely not all at once, but perhaps over the course of this year and probably even into next year, we could see a continuation of this bear market. And so with that being said, that's going to do it for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.